All right, so let me just move on to the next question, which is, in the course of your audit, you have come across a related party transaction which prima facie appears to be biased. How would you deal with this? Related parties. The duties of the auditor regarding to reporting of the transaction of the related parties. As required by Accounting Standard 18 is given in SA 550 on related parties. The duties of an auditor. What is given in SA 550? The duties of an auditor. What is given in SA 550? The duties of an auditor. As related duties of an auditor with regard to reporting of transactions. Related reporting of transactions with related parties as required by Accounting Standard 18 are given in SA 550 on related parties. As per SA 550, related parties, the auditor should review information provided by the management of the entity, identifying the names of all the known related parties. Okay, since the management is primarily responsible for identification of related parties, SA 550 requires that to identify names of all the known related parties, the auditor may inspect the records or documents that may provide information about the related party and the transactions. So over here, what they're saying is that the auditor should review the information related to the related party. So just write this for 550, mandatory to write this. Requires names, and so primary responsibility of the company management to identification of all the related parties requires that to identify the names of all the known related parties. The auditor may inspect the records or documents that may provide information about the related party transactions, related party relationships. Okay, and auditor may inspect the records or documents that may provide information about the related party relationships and transactions. In this case, the auditor is finding a related party transaction which prima facie appears to be biased, and the auditor is finding a related party transaction which is prima facie appears to be biased, so the auditor is required to confirm the same. For identified significant related party transactions outside the entity's normal course of business, the auditor shall inspect the underlying contracts or agreements, if any, and evaluate whether the business rationale or the lack thereof of transactions suggests that they may have entered into and engage in fraudulent financial reporting or to conceal misappropriation of assets. And number two is that he has to evaluate whether the terms of transactions are considered with the management's explanations. And third one is that the transactions have been appropriately accounted for and disclosed in accordance with the applicable financial reporting framework. The auditor should also obtain audit evidence that the transactions have been appropriately authorized and approved. And the auditor should also obtain evidence that the transactions have been appropriately authorized and approved, and transactions have been appropriately accounted for and disclosed in accordance with the applicable financial reporting framework, and the terms of the transaction are consistent with the management's explanations, and the business rationale suggests that or the latter, whether the business engaged into fraudulent financial reporting or to conceal misappropriation of assets. And after obtaining further information on significant transactions outside the entity's normal course of business, and for identify significant related party transactions outside the normal course of business. So what they do is that requires to identify names of all the known related parties. The auditor may inspect the records or documents and may provide information about the related party relationships, etc. And we've given examples as before. After obtaining the information on significant transactions outside the entity's normal course of business, which enables the auditor to evaluate whether the fraud risk factors there are any present, where the applicable financial reporting framework establishes the related party requirements to identify the risks of material misstatement. What they do is that after obtaining further information on significant transactions outside the entity's normal course of business, enables the auditor to evaluate whether fraud risks, if any, are present, where the applicable financial reporting framework establishes related party requirements. No, one second, let me read this again. After obtaining further information on significant transactions outside the entity's normal course of business, enables the auditor to evaluate whether fraud risks are present, and where the applicable financial reporting framework establishes the related party requirements to identify the risks of material misstatement, and where the applicable financial reporting framework establishes related party requirements to identify the risk of material misstatement. So from the applicable financial reporting framework, which mentions about related party transactions, from that point we can identify the risks of material misstatement. And for the first part is that after obtaining information on significant transactions outside the entity's normal course of business, it enables the auditor to evaluate whether the fraud risk factors, if any, are present. Fraud risk factors are present, and that's about it. In addition, the auditor needs to alert for the transactions which appear unusual in the circumstances and which may indicate the existence of a previously unidentified related parties. Where the applicable financial reporting framework establishes related party requirements, the auditor shall obtain written representations from management, and where appropriate, those charged with governance, that they have disclosed through the auditor the identity of the entities related parties and all the where the applicable financial reporting framework establishes related party requirements, the auditor shall obtain written representations from the management. So here we said if the financial reporting framework is talking about what can I say? If it talks about related party requirements, from that place we have to understand that we have to get representations from the management that and where appropriate those charged with governance that they've disclosed to the auditor the identity disclosed to the auditor the identity of the entities, related parties, and the related party relationships and transactions of which they are aware, and they have appropriately accounted for and disclosed such relationships and transactions in accordance with the requirements of the framework. So, and they have appropriately accounted for and disclosed such relationships and transactions in accordance with the requirements of the framework. So, they've appropriately accounted for, and they've also disclosed the same in accordance with the requirements of the framework. So, they have to get written representations for that. That's about it. Okay, and finally, the auditor should report on the basis of this fact that the related party relationships and transactions prevent the financial statements from achieving true and fair representation, or they have not, they are not the cause of financial statements to be misleading. And finally, the auditor should report on the basis of this fact that, the auditor should report on the basis of this fact that the related party relationships and transactions prevent the financial statements from achieving true and fair representation. So finally, the auditor should report on the basis of this fact that the related party relationships and transactions prevent the financial statements from achieving true and fair presentation for fair presentation frameworks, or they are not the cause, or they are not cause for the financial statements to be misleading. Finally, the auditor should report should report that the related party relationships and transactions prevent the financial statements from achieving true and fair presentation, or they are not cause for the financial statements to be misleading, right? So good or bad. So, good or bad, judge it as good or bad. That's about it. Okay, so first you have to say that the related party transactions prevent the financial statements from achieving true and fair, or they are not the cause for financial statements to be misleading. They are not cause for the financial statements to be misleading. Okay, for compliance frameworks. Okay. Just moving on to the next question, which is JY and Co is appointed as the auditor of Breeze Company. JY and Company seeks your advice, seeks your guidance for reviewing the records and documentation of the company regarding related party transactions, the normal course of business, right? So what they've done is that review of records and documentation regarding related party transaction according to SA 550 related party. During the audit, the auditor shall remain alert when inspecting the records or documents for arrangements or other information that may indicate the existence of a related party relationships or transactions that the management has not previously identified or disclosed to the auditor. So he will remain alert, which the management has not previously disclosed or identified to the auditor. So he will remain alert for the when the management has not previously identified or disclosed to the auditor, and he will remain alert while inspecting the records and documents for arrangements or other information that may indicate the existence of related party relationship or transactions. When he is inspecting records or documents that may indicate the existence of a relationship, indicate the existence of a related party relationship or transactions. In particular, the auditor shall inspect the following indications of the existence of a related party relationships or transactions that the management has not previously identified or disclosed to the auditor. So, in particular, the auditor shall inspect the following indications of existence of related party transactions. So, what are the inspections that he will do? First one is that bank, legal, and third party confirmations obtained as a part of auditor's procedures. Bank, legal, and third party confirmations. Bank, legal, and third party confirmations obtained as a part of auditor's procedure. So bank, legal, and third party confirmations. So second one is that minutes of meetings of shareholders and those charged with governance, and bank, legal, and third party confirmations obtained as a part of audit procedure. So you don't have to say obtained as a part of audit procedure, but you can just say the bank and legal documents obtained. Bank, legal, and third party confirmation. Second one is the minutes of the meetings of shareholders and those charged with governance, to see if in those minutes anything related to related party transactions have been discussed or not. Third one is such of the records or documents as the auditor considers necessary, which is a staple thing. Next one is that the auditor may inspect records or documents that may provide information about the related party transactions and transactions. For example, entity income tax returns, information supplied by the entity to regulatory authorities, shareholder registers to identify the entity's principal shareholder, statements of conflicts of interest from the management and those charged with governance, records of entities' investments, and those with pension plans. Any three you write, okay? Any three you write, and yeah, there are so many things that may provide entire, I think, for example, we can just write three and just leave it at that. Okay, so next we move on to essay 560, which is subsequent events, and briefly describe the auditor's responsibility regarding subsequent events. Subsequent events is essay 560, subsequent events is essay 560. 550 is related party transactions, okay, and first one is essay 560, subsequent events. And subsequent events and auditor's responsibility. When the auditor draws upon his audit plan, checking of subsequent events is an important audit procedure irrespective of the level of test checks employed for checking of transactions during the year. So irrespective of the level of test checks employed during the, irrespective of the level of test checks, irrespective of the level of test checks employed for checking of the transactions during the year. So irrespective of the level of test checks, checking of subsequent events is important because irrespective of the level of test checks employed for checking of the transactions during the year, subsequent event transaction checking is more important. And in fact, more detailed check is normally required for subsequent events to confirm that the assertions contained in the financial statements, example, the payment made by debtors after the closing of the accounting period would confirm that the outstanding debtors on the date of the balance sheet have been realized. So in fact, a more detailed check is normally required for subsequent events to confirm that certain assertions contained in the financial statements. So in fact, a detailed checking of the subsequent events to confirm certain assertions contained in the financial statements, examples, the payments made by the debtors after the close of financial thing would confirm that the outstanding debtors on the date are realized. Essay 560 on subsequent events establish the standards on auditors' responsibilities regarding subsequent events. 560 talks about the auditor's responsibility on subsequent events. And next one is that what happens is that also states the term that subsequent events refers to the events occurring between the date of financial statement, the date of auditor's reports, and the fact that comes to known to the auditor after the date of auditor's report. So what is that? Events refers to the events occurring between balance sheet and audit report, and the facts that came to be known to the auditor after the auditor's report. Essay AS4 on contingencies and events occurring after the balance sheet date deals with all those significant events, both favorable and unfavorable, that occur between the balance sheet date and the date on which the financial statements are approved by the board of directors in case of a company and by the corresponding approving authority in a case of any other entity. As per AS4, two types of events can be identified: those which provide further evidence to the conditions that existed at the balance sheet date, but here we are referring to AS4, but we don't talk about in AS4. As per AS4, two types of events can be identified. Two types of subsequent events can be identified. First is that those which provide further evidence to the conditions that existed as on the balance sheet date, and those which are indicative of the conditions that arose subsequent to the balance sheet date, right? So that arose subsequent to the balance sheet. Essay 560 lays down that the auditor should consider the effect of subsequent events on the financial statements, and on the auditor's report when the time between the close of the year end and the adoption of accounts is about to take place. Examination of subsequent events gains more importance. So when the time between the close of the year end and the adoption of accounts is about to take place, examination of subsequent events gains more importance. So when the time between the close of the year end and the adoption of accounts is about to take place, the examination of subsequent events gains more importance. Essay 560 further provides that the auditor shall perform audit procedures designed to obtain sufficient appropriate audit evidence that all the events occurring between the date of the financial statement and the date of the audit reports that require adjustment of or disclosure in the financial statements have been identified. that required adjustment of or disclosure in the financial statements have been identified. The auditor is, however, not expected to perform additional audit procedures on matter which are previously applied audit procedures have provided satisfactory conclusions. However, auditor is not expected to perform additional audit procedures on those things for which previously audit procedures have been provided and they got satisfactory results conclusions from it. The auditor shall perform the procedures required above so that they cover the period from the date of financial statements to the auditor's report or as near as predictable thereto. No need to say that, just say that to cover the period between these two. And second one is that here they're also talking about AS4. I don't know if we are supposed to talk about NDS or AS, but AS4 talks about contingencies and events occurring after the balance sheet date, right? So coming back to this one, the auditor shall perform the procedures required above so that they cover the period from the date of financial statements. Okay, the auditor shall also take into account the auditor's risk assessment in determining the nature and extent of such audit procedures and shall include the following. He should also take into risk assessment in determining the nature and extent of audit procedures. First one is obtaining understanding of any procedures management is established to ensure that the subsequent events are identified. Obtaining an understanding of any procedures, obtaining an understanding of any procedures that the management has established to ensure that the subsequent events are identified. Second one is that inquiring the management and where appropriate those charged with governance as whether any subsequent events have occurred which might affect the financial statements. Reading the minutes if any of the meetings of the entities, owners, management and those charged with governance that have held after the date of financial statements and inquiring about matters discussed at any such meetings for the minutes are not yet available. So reading the minutes if any of meetings of the entities, owners, management and those charged with governance that have been held after the date of the financial statements and inquiring about matters discussed at any such meetings for which the minutes are not yet available. Reading the entity's latest subsequent interim financial statements if any. When as a result of the procedures performed above, the auditor identifies events that are that require adjustment of or disclosure in the financial statements, he shall determine whether each such event is appropriately reflected in those such financial statements. Right. So, what are the three things that he needs to take into account to determine the nature and extent of audit procedures? First one is obtaining an understanding whether the management has done something. Second one is that inquiring of the management where appropriate those charged with governance as to whether any subsequent events have occurred which might affect the financial statements. First one is that obtaining an understanding what the management has done to identify those events. Second one is that asking them whether any events have identified. Third one is that reading the minutes that have been held after the financial statements and inquiring about the matters discussed at any such matters are not yet available. So, reading the minutes of the meetings that is held after the balance sheet date and also inquiring about the matters where the minutes is not being prepared yet and reading the entity's latest interim financial statements if any, right? Whether as a result if he finds out that there have been any whether as a result of these procedures the auditor identifies that they require an adjustment or a disclosure in the financial statements the auditor shall determine whether each such event is appropriately reflected if each of such event is appropriately reflected in the financial statements, whether it requires any adjustment in the name of adjustment of or disclosure in the financial statements, and each of the same is being reflected appropriately in the financial statements, right? So these are the words. I'll have to sit and underline the keywords in this, only then it will be easy. A Company Limited has not included in the balance sheet data as on 31/3/2016 a sum of 150 crores being the amount of arrears of salaries and wages payable to the staff for the last 2 years as a result of successful negotiations which are going on in the last 18 months and concluded on 34/2016. The auditor wants to sign the balance sheet and give the audit report on 31/5/2016. The auditor came to know the result of negotiation on 15/5/2016. Comment. So as per subsequent events, this case requires the attention of SA 560 subsequent events and AS4 contingencies and events occurring after the balance sheet date, and AS 29 provisions, contingent liabilities and contingent assets, P, CL and CA, right? So as per AS 4, contingencies and events occurring after the balance sheet date, adjustments to assets and liabilities are required for events occurring after the balance sheet date. Adjustments to assets and liabilities are required for the events occurring after the balance sheet date that provide additional information materially affecting the determination of accounts amounts that provide additional information materially affecting the determination of amounts relating to the determination of amount relating to the conditions existing as the balance sheet date. Similarly, as per AS 29, provisions, contingent liabilities, and contingent assets, future events that may affect the amount required to settle an obligation would be reflected in the amount of a provision where there is sufficient objective evidence that it will occur. As per AS 29, provisions, contingent assets, and contingent liabilities, future events that may affect the amount required to settle that may affect the amount that is required to settle an obligation should be reflected in the amount of a provision where there is sufficient objective evidence that it will occur that that it will occur. So future events that may affect the amount required to settle an obligation future events that may occur that may affect the amount which is required to settle an obligation should be reflected in the amount of provision where there is sufficient objective evidence that it will occur. And in the instant case, the amount of 1.50 crores is a material amount and is a result of an event which has occurred after the balance sheet date. The facts have come to known to the auditor before the date of issue of the audit report in the financial statements. The auditor has to perform the procedure to obtain sufficient appropriate audit evidence covering the period from the date of financial statements, that is 31/3/2016 to the date of auditor's report 31/5/2016. He has to provide sufficient appropriate audit evidence covering the period which is the audit report date and the financial statements date. It will be observed that as a result of long pending negotiation, a sum of 1.50 crores representing the arrears of salaries have not been included in the financial statements. It is quite clear that the obligation requires for a provision for outstanding expenses as per AS 4 and as per AS 29. So, so it is very clear that as per the long pending negotiation, a salary of 1.56 crores representing arrears have not been included in the financial statements. Therefore, it's quite clear that the obligation requires the provision for outstanding expenses as per AS 4 and AS 29. So, as per SA 560 subsequent events, the auditor should assure that all the events occurring subsequent to the date of financial statements and for which applicable financial reporting framework requires adjustment or disclosures have been adjusted or disclosed. So, as per SA 560, the auditor should assure that all the events occurring subsequent to the date of balance sheet and identifies that EWAs require which are applicable financial reporting framework requires adjustment or disclosure have been adjusted or disclosed. So here it's given that that's about it. So the auditor should request the management to adjust 1.50 crores by making provision for expenses. If the management does not accept, then he should qualify the report. So he should ask the management to adjust the sum of 1.50 crores by making a provision, and if they don't do it, they have to qualify the report. Next one is that Mrs. LMP Associates Chartered Accountants, while conducting an audit of PQR Limited, want to conduct an inquiry of the management and those charged with governance as to whether subsequent events have occurred that might affect the financial statements. So over here is given that the auditor has to perform procedures that will cover the period, and he should also take into the auditor's risk assessment in determining the nature and extent of audit procedures, in which one of the procedures is inquiring the management where appropriate those charged with governance as to whether any subsequent events have occurred which might affect the financial statements. So guide the firm with the matters where specific inquiry may be conducted to evaluate subsequent events. Guide LMP Associates with the matters where specific inquiry may be conducted to evaluate the subsequent events. Okay. First one is specific inquiries to evaluate as per SA 560 subsequent events in inquiring of the management and where appropriate TCG as to whether any subsequent events have occurred that might affect the financial statements. The auditor may inquire as to the current status of the current items that were accounted for and on the basis of preliminary or inconclusive data, and may make specific inquiries about the following matters: whether new commitments, borrowings or guarantees have been entered into, whether sales or acquisitions of the associates sales and acquisitions of the assets have occurred or are planned, whether there have been any increases in the capital or issuance of debt instruments such as the issue of new shares or debentures, or an agreement to merge or liquidate has to be made or is planned, whether any assets have been appropriated by the government or destroyed, whether there have been any developments, and whether there are any unusual accounting statements whether any events have occurred that is relevant to the recoverability of assets. So here they're talking about what are the different inquiries that has to be made, and I think this is very important because at least we should be able to write 5 points in this. And yeah, next is SA 570, which is going concern. And yeah, so going concern is like a financial indications that has to be considered for evaluating the assumption of going concern. So what are the things that we would consider to consider a company as a going concern? First one is financial indications and going concern. 570 aims to establish standards on auditor's responsibility in the audit of financial statements regarding the appropriateness of going concern assumption as a basis of further preparation of financial statements. And the following are the financial indications to be considered. And first is the net liability or the net current liability position, fixed term borrowings approaching maturity without realistic prospects of renewal or repayment, and indications of withdrawal of financial support by trade payables, and negative operating cash flows indicated by the historical or prospective statements, adverse key financial ratios, and substantial operating losses or significant deterioration the value of assets used to generate cash flows, arrears or discontinuance of dividends, inability to pay trade payables on due dates, and inability to comply with the terms of loan agreements, change from credit cash to cash on delivery transactions with the suppliers, inability to perform financing and financing for essential new product development or other essential investments. So this will also require a mnemonic. I think I have to find out a mnemonic for these things. And yeah, sometimes when you're reading auditing and you might have you might have a doubt whether all of this is going to materialize the day before exams. And let me tell you something, CA course is not for someone who cannot accept failure, because this will teach you a lot of things about yourself and how you would handle a lot of things. And instead of running away from it, it's better that we sit down and we read the whole thing. But for subjects like law and auditing especially, we cannot say that we won't get this answer, or we won't get this question. Like, even though they've introduced this 70-30 proportion for MCQs, it's still going to be very difficult for all of us to remember all of these things the day before examinations. And so it's important to know the mnemonics, and in order to formulate the mnemonics, it's going to be even more difficult for us, because you will have to give an entire reading of the whole subject before being able to give mnemonics for it. So this course is not for the weak. It's not for people who just want it easy. And now in this audio, I'm going to be talking about written representations SA 580, and I will be talking about SA 600 using the work of another auditor, and then we'll be talking about SA 610, which is using the work of internal auditors, and SA 620 using the work of an auditor's expert. Alright, so it will be in a very like I've mentioned, all of this is going to be just to familiarize with the words of auditing. And yes, so starting with SA 580, written representations, explain what is meant by written representations and indicate to what extent the auditor can place reliance on such representations. Written representations, a written statement by the management provided to the auditor to confirm certain matters or to support other audit evidence. So a written statement which is given by the management to provide the auditor to confirm certain matters or to support other audit evidence. And written representation in this context do not include financial statements, assertions therein, or supporting books and records. And audit evidence is all the information that is used by the auditor in arriving at the conclusions on which the audit opinion is based. And audit evidence is all the information that is being used by the auditor in arriving at the conclusion on which the audit opinion is based. And thus the written representations are necessary information that the auditor requires in connection with the audit of the financial statements. And thus written representations are necessary information. It is a necessary information that the auditor requires in connection with the auditor requires in connection with the audit of entities' financial statements. Accordingly, similar to responses to inquiries, written representations are evidences. Although written representations provide necessary audit evidence, they do not provide sufficient appropriate audit evidence on their own, but about matters with which they can deal. Furthermore, the fact that the management has provided reliable written representation does not affect the nature and extent of audit evidence, other audit evidence that the auditor obtains about the fulfillment of the management's responsibilities or about specific assertions, right? So what they're saying is that audit evidence does not provide written representations does not provide audit evidence on its own, and it does not on its own about any matters with which they deal. Furthermore, the fact that management has provided reliable written representations does not affect the nature or extent of other audit evidence that the auditor obtains about the fulfillment of management responsibilities or about other specific assertions. And the auditor shall request management to provide a written representation that it has fulfilled its responsibility for the preparation of financial statements. The auditor should request the management to provide written representation that has fulfilled the responsibility of preparation of the financial statements in accordance with the applicable financial reporting framework, including whether their fair representation, including where relevant, their fair representation as set out in the terms of the audit engagement, and including where relevant, their fair representation as set out in the terms of audit engagement. And okay, so other essays require the auditor to request written representations if, in addition to such required representations, the auditor determines that it is necessary to obtain one or more written representations to support other audit evidence relevant to the financial statements, or one or more specific assertions in the financial statements. The auditor shall request such other written representations. So what happens is that other essays require the auditor to request written representations if, in addition to required representations, the auditor determines that it is necessary to obtain one or more written representations to support other audit evidence relevant to the financial statements, or more specific assertions in the financial statements. The auditor should request such other financial representations. I think the easier ones that we can understand here is that it does not provide evidence on its own. That is one thing. Second one is that if the auditor wants, he can get more more written representations, and the management shall request so auditor shall request the written representation from the management about what that it has fulfilled all the responsibility about how it has to prepare a financial statement in accordance with what applicable financial reporting framework. That's about it. So and then we have to write what is a written representation. Written representation statement by the management provided to the auditor can confirm whether certain matters or to support other audit evidence. Written representation in this context does not include financial statements, the assertions therein, or supporting books and records. Okay. Now, extent of reliance on SA 580 written representation states that if the auditor has concerns about the competence, integrity, and ethical values or diligence of the management, or about his commitment to or enforcement of these, the auditor shall determine the effect that such concerns may have on the reliability of the representations and the audit evidence in general. So SA 580 written representations talk about states that if, so we know that 570 is going concern and 580 is written representations, state that if the auditor has concerns about the competence, integrity, ethical values or diligence of the management, or about his commitment to the enforcement of these things, right, or about has concerns, you can just write if he has any problems with the competence, integrity and ethical values, CIE, just like PI, you can write CIE, competence, integrity and ethical values or diligence of the management, or about his commitment to or the enforcement of these. The auditor shall determine that effect of such concerns may have on the reliability of representations and the audit evidence is general. So the auditor should determine the effect that such concerns may have on the reliability of the representations and the audit evidence in general. So the auditor should determine the effect that he shall determine the effect that such concerns may have on the reliability of representations and the audit evidence in general. In particular, if the written representations are inconsistent with other audit evidence, the auditor shall perform audit procedures to attempt to resolve the matter. If the matter remains unresolved, the auditor shall reconsider the assessment of the competence, integrity, and ethical values or diligence of management, or its commitment or enforcement of these, and shall determine the effect that this may have on the reliability of representations and the audit evidence in general. So, in particular, if the written representations are inconsistent with our audit evidence, the auditor shall perform audit procedures to attempt to resolve the matter. And if the matter remains unresolved, the auditor shall reconsider the assessment of the competence, integrity, and ethical values or the diligence of the management. And shall determine the effect that this may have on the reliability of the representations. So, if he has a problem with the representations, he shall do audit procedures to resolve the same. And so, how will he know that he has a problem with it? That written representations are inconsistent with other audit evidence. So, the matter remains unresolved. Then he shall reconsider his judgment about these people and determine. So, that is the audit procedure. And what he does is that he will determine the effect that this may have on the reliability of the representations, that this may have a reliability of representations on audit evidence in general. If the auditor concludes that the written representations are not reliable, the auditor shall take appropriate actions, including determining the possible effect on the opinion of the auditor's report. The auditor shall take appropriate action, including determining the possible effect on the opinion of the auditor's report. The auditor shall take appropriate actions, including determining the possible effect on the opinion in the auditor's report. So that's about it. And so if he concludes that, first what he will do is he will rethink his judgment about these people, and then what he does is the reliability of representations for this. Okay. Next one is that state briefly the basic elements of the representation letter. And the basic elements of a management representation letter as per SA 580. Some of the basic elements of the management representation letter are: it is a written statement by the management provided to the auditor to confirm certain matters or to support other evidence. It is a written statement by the management provided to the auditor to confirm certain matters or to support other audit evidence. It does not include financial statements, the assertions therein, or the supporting books and records. So, it is a written statement by the management provided to the auditor to confirm certain matters or to support other audit evidence. And it does not include financial statements, the assertions therein, or supporting books and records. The auditor shall request the management to provide a written representation that it has fulfilled its responsibility and that it has fulfilled its responsibility for the preparation of the financial statements in accordance with the applicable financial reporting framework, and including where relevant their fair representation as set out in the terms of audit engagement, including where relevant the fair representation as set out in the terms of audit engagement. And so just a second. I'm just continuing with that. The written representation shall be there for all the financial statements and periods referred in the audit report. Alright. Now, in the course of audit of ABC Limited, its management refuses to provide written representations. As an auditor, what is your duty? The duty of an auditor, if the management refuses to provide written representations, as per SA 580 written representations, if the management does not provide one or more of the requested written representations, the auditor shall discuss the matter with the management and re-evaluate the integrity of the management and the effect that this may have on the reliability of the audit evidence in general, and take appropriate actions, including determining the possible effect of the opinion on the opinion in the audit report. The auditor shall disclaim an opinion On the financial statements, if the management does not provide written representations in accordance with SA 705, modifications to the opinion in the independent auditor's report. Modifications to the opinion in the independent auditor's report, that is SA 705. We will get there, but the conclusion here is that the auditor shall disclaim an opinion in the financial statements. He shall disclaim an opinion in the financial statements if the management does not provide written representations in accordance with SA 705, modifications of the opinion in the independent auditor's report. 3 points that he does if he finds out that the management is not giving him the requested written representations. The first one that he does is that discuss the matter with the management. Second one is reevaluate the integrity, that CIE, right? Competence, integrity. Once again, what is that? Reevaluate the integrity of the management. And evaluate the effect that this may have on the reliability of the representations and the audit evidence in general. So he shall reevaluate the integrity of the management and evaluate this the effect of this on the reliability of the representations in general and audit evidence in general, and take appropriate actions including determining the possible effect. Take appropriate actions including determining the possible effect. Determining the possible effect on the opinion in the auditor's report. Take appropriate actions including determining the possible effect on the opinion in the auditor's report. Take appropriate actions including determining the possible effect on the opinion in the auditor's report. Take appropriate actions including determining the possible effect including determining the possible effect on the opinion in the auditor's report. So that's about it. Next one is that an auditor of Sagar Limited was not able to get the confirmation about the existence and value of certain machineries. However, the management gave him a certificate to provide the existence and the value of the machinery as appearing in the books of accounts, and the auditor shall accepted the same without any further procedure, and sign the audit report. Is he right in his approach? So what he's done is that was not able to get confirmation about the existence and the value of certain machineries. However, the management gave him a certificate to prove the existence and the value of machinery as appearing in the books of accounts, and the auditor accepted the same without any further procedure and signed the audit report. Is he right in his approach? And thing is that he was not able to get confirmation about the existence and the value of certain machineries, and the management has given him a certificate to prove the existence and the value of the machinery as appearing in the books of accounts. So now the management has given him the certificate and he has accepted the same without any further procedure and signed the audit report. Is he right in his approach? So validity of written representation. The physical verification of physical assets, fixed assets, is a primary responsibility of the management. The auditor, however, is not required to examine the verification program adopted by the management. He must satisfy himself about the existence, ownership and valuation of fixed assets. In this case of Sagar Limited, the auditor has not been able to verify the existence and the value of some machinery despite the verification procedure followed in the routine audit. So he accepted the certificate given to him by the management without making any further inquiry, and so the auditor, however, is required to examine the verification program adopted by the management. He must satisfy himself about the existence, ownership, and the valuation of fixed assets. And in this case, the auditor has not been able to verify the existence of some machinery despite the verification procedure followed in the routine audit. He accepted the certificate given to him without any making further inquiry. And written representations, when the representation relate to matters which are material to the financial information, he should seek for corroborative audit evidence from other sources inside or outside the entity. He should evaluate whether such representations are reasonable and consistent with. So, in case he gets representations regarding matters which are material to the financial information, the auditor should seek corroborative evidence. Auditor should seek corroborative evidence from other sources inside or outside the entity. And he should evaluate whether such representations are reasonable and consistent with other evidences, and should consider whether individuals making such representations can be expected well to be informed on the matter, and written representations cannot be a substitute for other audit evidence that the auditor could reasonably just continue with what I've been saying. If the auditor is unable to continue sufficient appropriate audit evidence that he believes would be available regarding a matter which has a material effect on the financial information, that this will constitute a limitation on the scope of his examination, even if he has obtained a representation from the management on that matter. So even if this guy has obtained a representation from the management, if the auditor is unable to obtain sufficient appropriate audit evidence that he believes would be available regarding a matter which has or may have a material effect on the financial information. This will constitute a limitation in the scope of his examination. And so suppose he's got a representation regarding one matter, and the management is having more details to offer, and he is unable to obtain sufficient appropriate or evidence that he believes that would be available, and so that will have a material effect on the financial information. This will constitute the limitation of the scope of his examination, even if he has obtained a representation of the management on that matter. Right. Next one is that the auditor of Moon Private Limited, having a turnover of rupees 12 crores, was not able to get the confirmation about the existence and the value of certain stock. However, a certificate from the management has been obtained regarding the existence of the value of the stock at the year end. The auditor relied on the same and, without any further procedure, signed the audit report. Is he right in his approach? Validity of written representation. The physical verification of stock is the primary responsibility of the management. However, he is required to examine the verification program adopted by the management. He must satisfy himself about the existence and the valuation of stock. In this case of Moon Private Limited, the auditor has not been able to verify the existence and the value of certain stock despite the verification procedure followed in his routine audit. He accepted that the certificate given to him by the management without making any further inquiry. So as per SA 580, when a representation relates to matters which are material to the financial information, then the auditor should seek corroborative audit evidence for other sources inside or outside the entity. When the representation is related to matters, what do you call that? When the representation is related to the matters, representation is related to the matters which are vital to the financial information, then the auditor should seek corroborative audit evidence for the other sources inside or outside the entity. He should seek corroborative audit evidence for other sources inside or outside the entity. He should evaluate whether such representations are reasonable. He should evaluate whether such representations are reasonable and consistent with other evidences, and should consider whether individuals making such representations can be expected to be well informed on that matter. And he should evaluate whether the representations are reasonable and consistent with other evidences, and should consider whether individuals making such representations are well informed on that matter. Written representations cannot be a substitute for other audit evidence that the auditor could reasonably expect to be available. And if the auditor is unable to obtain sufficient appropriate audit evidence that he would believe that is regarding that matter, then which may have a material effect on the financial information, this will constitute a limitation of the scope of his examination, even if he has obtained a representation from the management on that matter. Right. So next one is that PRSH and Company is a statutory auditor of Make My Journey Company Limited, and the company is in the business of tours and travels, and annual turnover of the company is 2,000 crores, and the profits are INR 190 crores. During the planning meeting of the management and the auditors, it was discussed that the management needs to provide written representation letter to the auditors for the preparation of financial statements and for the completeness of the information provided to the auditor. At the same time of closure and audit, there has been some confusion about the requirements of the written representation letter. Management argued that the representation need not be written, and it can also be verbal, which has provided to the audit team during the course of audit. So next is that auditors have completed their documentation, and hence in a way representation based on verbal discussions with the auditor has also got documented. Auditors explained that this is mandatory to obtain written representation in accordance with the requirements of SA 580. However, still some confusion remains regarding the date and the period covered by the written representation. You are required to advise about the date and period covered by the written representation in view of SA 580. As per SA 580, written representations are necessary audit evidence. The auditor's opinion cannot be expressed, and the auditor's report cannot be dated before the date of written representations. Furthermore, because the auditor is concerned with events occurring up to the date of audit report that may require adjustment to or disclosure in the financial statements, the written representations are dated as near as practicable to, but not after the audit report on the financial statements. So in some circumstances, it may be appropriate for the auditor to obtain written representation regarding a specific assertion, and written representation are for all periods referred to in the audit report, because management needs to reaffirm that written representation it previously made with respect to prior periods remain appropriate. So the written representation for all the periods referred to in the audit report, because management needs to reaffirm that the written representations it previously made with respect to the prior periods remain appropriate. and the auditor and the auditor may agree to a form of written representation that updates the written representations relating to prior periods by addressing whether there have been any changes to the written representations, and if so, what are they, right? So the management may agree to a particular form of written representation that updates the written representatives that updates the written representations relating to prior periods by addressing whether there are any changes to such written representations, and if so. And situations may arise where current management are not present during the periods referred in the audit report. Such persons may assert that they are not in a position to provide some or all of the written representations because they were not in place during the period. This fact, however, does not diminish the person's responsibilities for the financial statements as a whole. Accordingly, the requirement for the auditor to request from them written representations that cover the whole of the relevant period still applies. So the conclusion here is that according to the requirement for the auditor to request them written representations that cover the whole relevant period applies. Situations may arise where the current management were not present during all the periods referred to in the audit report. Such persons may assert that they are not in a position to provide some or all of the written representations because they were not in place during the period. However, this does not diminish the fact of the person's responsibilities for the financial information as a whole. And written representations are for all the periods that are referred to in the audit report, because the management needs to reaffirm that the written representations it has previously made with respect to the prior periods remain appropriate. So written representations are basically for all the periods which are referred to